Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Gerard Smith, head of PostTrade at Nasdaq. We also have Nick Solinger, president of FIA Tech, and we're here to discuss a new announcement and a partnership that aims to reduce the complexity of post-trade data processing across the exchange-traded derivative market and integrate Nasdaq's strategic clearing platform. It is great to have the both of you with us. And Nick, we're going to kick it off with you first. Tell us more about FIA Tech and its role in the post-trade ecosystem.
Jill, thanks for having us on. I guess the easiest way to talk about what FI Tech does is focus on the first two letters, which stands for the futures industry. We're kind of the captive technology provider to the futures industry. We build market infrastructure solutions for over 1,000 market participants that are our clients and users globally. We service the needs of everyone from the cattle ranchers who have regulatory reporting requirements because they hedge prices of their inputs, feed, and ultimately price of their cattle when they sell them in the market, all the way up to the biggest hedge funds and asset managers who use us for a variety of things. We were formed by the industry trade body, the Futures Industry Association, and owned by a consortium of the largest clearing firms globally that are members of clearinghouses that use Nasdaq's clearing platform.
So, Gerard, let's talk about this. What about the Nasdaq real-time clearing platform? What role does it play in this ecosystem?
Yeah, so first of all, Jill, thanks for having me on. So I work in the FinTech part of Nasdaq. That's the part of Nasdaq that sells technology to financial market infrastructures all around the world. So that could be exchange technology, clearing technology, and risk technology for CCPs, and also CSD technology as well. We sell that technology all around the world, like I said, to places like clearinghouses in Australia, Japan, Singapore, lots of different places in Latin America. And our strategic product is called NRTC. That's Nasdaq Real-Time Clearing. It's the product that we're investing in. It's the product. It's the only product that we sell now for clearing. We have other products, and we're hoping to migrate clients to those as well. But it's state-of-the-art technology, it's cloud-ready, it's multi-asset class, does derivatives, it does cash equities, clearing, commodities, etc. as well. And it's ready to handle the volumes that can be put through it by the world's largest marketplaces, and it's highly resilient, as you expect of FMI technology as well. That's the technology that we're going to be integrating into the FIA Tech solution, Trade Data Network, that Nick's just been telling us about.
Nick, let's talk about that for a moment here. What are the problems that you're looking to solve? In other words, what are the current challenges in the global post-trade network?
So what's really important to understand about how the derivatives market has evolved is it's very much a global asset class. Most investment managers who use futures for speculating or hedging on prices will be trading in markets as diverse as ASX in Australia, Hong Kong exchange in Hong Kong, Singapore exchange, Eurex over in Europe, and obviously in the US here, CME Group, ICE and others. There's more than 40 exchanges globally on which you can trade derivatives. So it's very much a 24-hour market. A lot of diverse products from commodity-based products, equity-based products, et cetera. So what that means is highly fragmented, non-standardized pools of data. And in a high-volume, volatile market, it can cause disruptions that lead to trades not getting to the ultimate place they should be in the right account of the investor who's instructed the trade. Since 2020, we've seen a phenomenal growth in volumes. We've actually stopped counting the number of record days we've had since the beginning of 2020. As interest rates have increased, you've got a lot more volatility. So effectively, most clients are really struggling with these higher volumes and just the data challenges and reconciliation challenges that come along with that.
So, Nick, what about the issues that the exchange-traded derivatives market faces?
So if you look across the market, historically, a lot of these markets go back well before the advent of electronic trading. But a lot of these markets converted to support electronic trading in the late 80s and 90s. So we really suffer from a lack of standardization across these platforms. Trading across 30 different exchanges and clearinghouses mean you have to speak often 30 different languages of post-trade data. And it just raises the cost. And as we know in trading, every frictional cost results in fewer trading opportunities for clients. So we're really trying to address that standardization a variety of ways, both by creating new industry standards to simplify and make it easier for clients to trade across these global marketplaces.
And to wrap up with you, Nick, let's talk about the solution for the problem. Tell us more about the Trade Data Network.
Sure. So one of the ways that we decided to tackle these data challenges was actually bring together the trade data for clients in a unified platform that did kind of convert these 30 disparate languages, 40 disparate languages across exchanges into one global ledger that would show you where your trade is. You might have traded it in Singapore. You might be clearing it ultimately with a broker that is in London. We want that all to be easy for clients to keep track of, even though it may span different systems across different time zones. So the Trade Data Network initiative basically brings GPS tracking for trades globally for clients in one global scalable ledger.
All right, and let's wrap it up here back in studio with Gerard. Why did you decide to partner with FIA Tech, and how will the integration of Nasdaq's clearing platform benefit the industry overall?
Yeah, so I guess my job as Nasdaq, Jill, is to make sure that our technology, in terms of the post-trade technology, is the best in class. And so really I have to think about a few different things. Amongst them, first of all, making sure that we're ahead or on top of regulatory changes for the CCPs that we service. Also making sure that we're talking to a client, so the CCPs themselves, to understand what their pain points are, what do they need us to do to enhance the product in order to make it easier for them and their clients to do business. And then finally, we need to keep an eye on what's happening in the wider industry, and that means understanding industry changes and industry initiatives. So that could be standardization, which is a big part of what Nick has been talking about. But in the initiatives part, that's why we want to partner with FIA Tech, because those guys are really driven by what the industry is demanding in terms of IT solutions. And if we can make it easier for our CCPs to participate in those industry initiatives, then that's good for them, that's good for us as well. So what we're hoping to do with the integration with Trade Data Network is provide data from our CCP solutions into the Trade Data Network, making it possible for CCPs that have our technology to just plug and play with that network. That brings the benefits that Nick's already been talking about with respect to enhancing the transparency of trades, that GPS concept that he talked about, so that the buy side in particular get a better transparency in what's happening with their trades across many different CCPs that they use. And also it just helps to standardize the way that the industry works, get rid of those costs and inefficiencies that none of us want.
Sounds like it's all about interoperability at the end of the day. All right, appreciate the insight. Thank you, Gerard. Thank you, Nick. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.